Hi guys, welcome to a new week. Thank you so much for tuning in last week and for the last couple of videos. Greatly appreciated. I want to say I appreciate everyone's attendance and willingness to come every week and hear what I have to say. Thank you so much. So last week I got emails and text messages like, okay Lauren, where's the new video? Well, I had a nasal situation last week. My sinuses did something really crazy, and I had to cancel my book for one day of business just because I wasn't feeling well and I didn't want to pass on what I had to my clients. But luckily it was sinuses, so it wasn't anything contagious. So here we are today talking about taxes. First of all, I want to say disclaimer. I am not an accountant. I am not a tax professional. These are just tips and tricks that I've learned along the way with owning a business and some things that I learned that I'm willing to share. But in no way am I a tax professional or an accountant. So don't say, well, Lauren said, well, Lauren doesn't know. She's just figuring this out. Okay, so now we can get started. So last week we talked about getting started and what to do, how to protect your business, things of that nature. So today we're going to talk about taxes. So once you get started, you pick your name, you protect your business legally, whether that's the LLC, a corporation, or organization, whatever you decide to do. The next step is to get your EIN number. That's so beneficial. One thing that I did learn is that when you establish a business, you can actually claim a loss in that business up to 3 years, 3 or 5 years. I think it's 3 to 5 years, I believe. Another tip or trick that I'm not completely clear about, but I think it's 3 years. Once you get your tax EIN number, you can go in and open up a bank account and basically separate your personal assets from your business assets, which I think are huge. So that way when operating expenses and costs come about, you are able to accurately document those things without using your personal money. You can use your business account to do those things. The way that I do it is I have a spreadsheet that I update monthly. Well, wait, I take that back. I'm not telling the truth. My first year in business, I had a spreadsheet that each month on a Monday, I would sit down and basically tally up all of my receipts, the receipts that I got from vendors, from distributors that came in to sell products. If I bought any hair, if I bought a new curling iron or flat iron, my marketing expense, like my website, or if I bought business cards, I would sit down, tally up all of those things in my spreadsheet, send a spreadsheet to my dad because he does my taxes, and say, Daddy, look at this, make sure everything looks right. And that's how I did in my first year. Well, last year I got lazy and I didn't do it. So literally it took me a few days to sit down and collect all of my receipts, put them in the correct categories on my spreadsheet, send them to my dad, make sure they all looked accurate. So that way when it was time to file, I was safe and I wasn't nervous about if I had done something correct. Because let me tell you something, the IRS, honey, is nothing to play with. And I want to keep all my little ducks in a row because I don't want no problems. Okay. On my spreadsheet, I have several different categories. So I have things like food and entertainment, gas, marketing, miscellaneous. Miscellaneous can be if you have a home, you can write off a portion of your mortgage for your office, for your home office. If you conduct business when you're at home, a portion of my car payment goes towards deductions as well because I have to drive my truck to get to work, things of that nature. So the other expense that I have is hair. So whenever I purchase hair for a client, whether it's for a cancer patient or someone who's just coming in for an install, I also tally that up as well. The major key in all of this, major key in all of this is your receipts. Keep everything, keep all of your receipts, because in the event that you ever get audited by the IRS, you want to have a paper trail, and your paper trail is your receipts to say, hey, I did this, I paid for this, this supports my my deductions. So if they ever come back and ask questions, you're safe. And I believe you have to keep your receipts up to 2 years. In the event that you ever get audited, you're safe. This year I am going to try to get back into the habit of sitting down monthly and tallying up my receipts to make sure that they're accurate and that I am putting them in the correct categories. The way that I did it is through a Google Drive document. It's called Sheets, and it basically saves every time you update something on the sheet. You can always go back to it and just make sure that what you did, that you added in all of the receipts along with the date, what it was for, and it's under the correct category. And you can share it with multiple people. So my sheet is shared with my dad and my husband. That way they can both see, okay, so Lauren spent $500 on a marketing event. Okay, so how did you pay for that? Did you pay for that through a check? Did you pay for that through a debit card? And was that from which business account? Things like that. Just basically staying organized. And I think sometimes in business we get so busy that we don't stay organized, and then when it's time to do taxes, whether you do them yearly or quarterly, it becomes a headache because you didn't stay organized. Organize. Stay organized. It'll save you so much of a headache. The other thing I wanted to discuss is that the power of that tax EIN number. Guys, that tax EIN number is phenomenal. Basically, it is your business's social security number. So you have yourself, which is your own social security number that you were born with. The government issues it to you when you're born, when you're here. That's yours. As a business, you can have your own tax EIN number. That EIN number basically verifies you as a legal business, as a legal operating business. You can separate your assets from your personal to your business, and whenever it's time to accurately file your taxes, you have a paper trail to show what all you've done throughout the year tax wise. So guys, I just want to say that I think that the whole purpose of this series is to make sure that we operate and treat our businesses with as much respect as we should. Nobody's going to treat your business like a business unless you treat it like a business. I tell people all the time, I didn't leave corporate America to run a hustle at all. I didn't. I left corporate America for a legacy, to run a business the way it's supposed to be ran. And let's be clear, I don't know everything. I'm still learning along the way. There are still things that I didn't know about that I'm slowly figuring out now that I didn't know my first year. But the idea is to stay organized, to run your business like it truly is a business. I appreciate everyone's feedback. I appreciate everyone tuning in. I thank you guys so much. Next week, we're going to talk about customer service, the difference between great customer service and great service. You get it? Service and customer service. You can go to Great Clips and get a service. And don't get me wrong, there's nothing wrong with Great Clips. I'm just saying, you can go to Great Clips and get a service. Or you have clients who truly value customer service. Get it? Well, if you don't worry about it, tune in next week. Thank you guys so much. I hope that this was beneficial. Again, if you have any questions, comments, or concerns, please feel free to hit my DM, my inbox, text, comment below, whatever. I'm so looking forward to any feedback that you guys have. I hope that these videos have been beneficial. Thank you guys so much. Her Majesty, y'all, year 2. Thanks for tuning in again.